Everyone talks about ETFs like VOO or SCHD, but I've seen a lot of people discussing, especially on Reddit, about BRK-B, which is the Berkshire Hathaway ETF managed by Warren Buffett himself. Some investors swear by it, saying it consistently beats the market, versus other people who say it's a ticking time bomb and ready to go off the minute Buffett's gone. So let's unpack BRK-B. Is it really a genius investment, or is it really just hype built on Buffett's reputation? So first, let's get clear about what BRK-B actually is. Berkshire Hathaway is Warren Buffett's investment company, owning massive stakes in well-known companies like Apple, Coca-Cola, Bank of America, American Express, and a lot more. When you buy BRK-B shares, you're essentially getting a tiny slice of all these investments at once. Historically, BRK-B has crushed it. Over decades, Berkshire Hathaway has consistently outperformed the overall stock market, averaging around 20% annual return since Buffett took over, compared to about 10% for the S&P 500. Even recently, it's stayed competitive or beaten many popular ETFs, which is why some investors are asking, why bother with anything else? The reason people get so excited about BRK-B is so simple. It's managed by Warren Buffett, the legendary investor who's basically synonymous with smart investing. But that's also part of the problem. Investors worry Berkshire Hathaway might not perform so well without Buffett at the helm. So let's address the elephant in the room, Warren Buffett himself. Buffett's investing philosophy, which is buying stable, high-quality businesses at fair prices and holding them forever, is why BRK-B has performed so well. Buffett famously avoids trendy investments and focuses instead on fundamental value, stable cash flows, and long-term growth. Investors love Berkshire because Buffett's approach feels safe and proven. No hype, just solid performance year after year. But here's the catch. Buffett is currently in his 90s, and at some point, hopefully not soon, he'll step down or pass away, unfortunately. So investors are rightly asking what happens to Berkshire Hathaway after Buffett. And the truth is, Buffett has been preparing for this for years. He's assembled an experienced leadership team made up of people like Greg Abel and Todd Combs, who share his investment philosophy. Still, markets are emotional. The day Buffett leaves, BRK-B shares might take a big hit, at least temporarily, because investors associate so much of its success directly with him. Before we continue, if you're enjoying this video, I'd appreciate it if you could drop a like and subscribe. It would really help out the channel. Now, back to the video. Beyond Buffett's eventual departure, there are some other risks worth talking about. First, Berkshire Hathaway is massive. It's harder and harder for huge companies to outperform the market consistently, and so size can become an anchor. Secondly, Berkshire owns a lot of mature, slow-growing companies. Coca-Cola, American Express, and banks like Bank of America are solid but aren't exactly rapid growth stocks anymore, and this could potentially limit future returns. Also, unlike a regular ETF, BRK-B isn't diversified across sectors equally. It's heavily concentrated in financials, insurance, and a few big bets like Apple. If one of these sectors has problems, Berkshire's performance could suffer more than a typical diversified ETF. And finally, Berkshire doesn't pay dividends. Buffett believes reinvesting profits is smarter than paying shareholders, but some investors prefer cash payouts. If passive income's your goal, BRK-B won't deliver that. So who exactly should be investing in BRK-B and who should stay away? It could be a perfect choice for you if you trust Buffett's philosophy and like his simple, no hype style, if you want exposure to a carefully selected group of well-established companies, and if you're a long-term investor who can ride out volatility, especially around Buffett-related news. But it might not be the best fit for you if you want rapid growth or exposure to hot sectors like AI or emerging tech, or if you prefer consistent dividend income, and if you're uncomfortable with the risk of Buffett's eventual departure. So ultimately, BRK-B is still a great investment for many, but it's not necessarily a perfect replacement for broad, diversified ETFs like VOO or VTI. So if you decide you want to own BRK-B, here's how to do it smartly. First of all, don't go all in. Treat it as part of a balanced portfolio. Diversification is everything. Secondly, use dollar cost averaging. Invest consistently over time, not all at once. Thirdly, make sure you have grounded expectations. BRK-B won't double overnight, but it can deliver solid, steady returns over years. Investing wisely in Berkshire means understanding what it is and isn't, and staying patient even when the market panics. So hopefully this cleared up the BRK-B debate for you. Warren Buffett is a legend for a reason, but investing isn't about picking heroes. It's about strategy, diversification, and knowing exactly what you own. If you enjoyed the video, do me a favor and hit like, subscribe if you're new, and comment down below. I want to know your thoughts on BRK-B. Are you investing in it? Are you worried about Buffett's departure? Drop your take in the comments. As always, the Discord group and newsletter are linked below. They're totally free. So yeah, thanks for watching. See you guys in the next one.